All right, let's talk about what's really moving the markets right now. Months of wild swings and confusion. Global investors are finally watching the US dollar and interest rates realign. That's a big deal. Trade policy uncertainty, political drama. That broke the normal link between Fed moves and the dollar. Analysts say US interest rates are starting to matter again. If the Fed hints at a rate cut, the dollar actually responds. Market waking up from a weird dream. Still, the dollar isn't out of the woods. Long-term pressure, twin deficits, budget deficit, trade deficit. That erodes confidence in the dollar, plus concerns about America's institutional credibility. Last week, Jerome Powell sounded dovish. He's hinting the Fed could lower rates, maybe as soon as September. Markets were ready. Rate cuts usually spark stock rallies, but stocks barely moved. Investors remain cautious. The real test is ahead. U.S. releases, jobless claims, non-farm payrolls, CPI inflation report. These numbers determine if the Fed has room to cut or if inflation is still too high. What I'm watching: jobless claims. Faster job losses equals a red flag. Non-farm payrolls, fewer new jobs equals slowdown. CPI inflation, the biggest spotlight. If inflation cools, the Fed might cut in September. If inflation ticks up, all bets are off. Trading, investing, trying to make sense of headlines. Keep your eyes on these data points. The next few weeks are critical globally. Are you betting on a September cut or not? Drop your thoughts in comments. Hit follow for updates. See you in the next one. Quick recap. Unusual dislocation driven by trade policy uncertainty. Analysts suggest U.S. rates are regaining influence, but long-term pressure remains. America's twin deficits, budget and trade, are a long-term headwind, and eroding institutional credibility matters to global investors. Powell's dovish tone validated a September cut expectation. Markets priced a cut, yet stocks barely moved. Weak follow-through shows investors are still cautious. The real test: jobless claims, payrolls, CPI. Jobless claims, faster job losses equal red flags. Non-farm payrolls, fewer jobs means slowdown. CPI is the biggest spotlight. If inflation cools, the Fed could cut in September. If inflation ticks up, the Fed may have to hold or tighten. Short-term trades versus long-term portfolios. Your call. Remember, Fed moves ripple globally. Every data point matters to global investors. Are you betting on September? Drop your thoughts in comments. I read them. Hit follow for updates. See you next time. Quick recap. Watch jobless claims, non-farm payrolls, and CPI. Follow for updates and market breakdowns. See you in the next one.